Morning, everybody. 8:10 a.m. October 9th. Hope everybody had a good weekend. Unfortunately, in Israel, not going on the war, declaring war, but the attack from Hamas. That's not a good thing. So that is affecting markets, gold, oil, all that. Unfortunate events there. Um, so we're gonna not get into that talk. I'm not gonna talk about war, but obviously it's an unfortunate event, and hopefully that gets resolved. I don't see that probably getting resolved very quickly. So um, let's get right into it. Welcome to my channel. My name is Steven Gonzalez. I use volume profile, market profile to find structure in the market, along with gamma exposure level, supply and demand, and the rolling most traded price of the week, the month, and the year to give me structure and define whose side I want to be on, the bulls or the bears, right? Because price action is very tricky to just go off price action. Okay, if you have a good foundation and you're in a structure that's bullish, then you lean towards the bull side. If it's a weak structure, right, you're going to go with the bearish side. And that's how I look at the markets. All right. So subscribe if you haven't already. Set an alert. That would mean a lot. Okay. You could also, if you like the content, give me a like. That would mean a lot as well. You could also follow me on X at Gonzo719. Okay. Markets getting some buying a little bit. Now today is Columbus Day, and there's the banks are closed, bond market's closed. So without the war going on, I would expect more muted, action. But that war is like making some consolidation happen in the markets. We gap down. We opened up with a gap down. So there might be some volatility. Right now, I'm seeing relative volume. Okay, I can show you that really quickly. That is not relative volume. Why is that not relative volume? All right, I don't know why that is showing me that there. That's interesting. Oh, this is probably why. Oh, maybe not. All right, I have to look into that. I don't know why that changed. Anyway, what I was saying was right now I'm looking at volume. It's about 118% of 130%. So we're right still at good volume. VIX is high. Okay, so that's what we're looking at. All right. So Columbus Day is here. All right. So volume is still up because of the war, but probably typically it wouldn't be. Okay. So let's get into the futures. Let's get into the futures. All right. And our scoop here, our number one news reporter here is giving us information here. Um, Rosita, I'm not sure if she's in the car selling a house right now. I'm not sure. She's a very busy woman. Um, but we got the VIX up 8%, 8.31%. Okay. Crude is up 4.13%. Okay. Um, this is not affecting any huge oil suppliers, but this is typical when something like war happens. Oil goes up, so that's going up. Gold is going up, almost up 1%. The dollar is up. Okay, people flying to the greenback. Silver's up. 30-year bonds, 0.11. The Dow's down 0.4. ES down 0.5. Nasdaq's down 0.66. Russell's down 0.83. That's the weakest of the indexes. Bitcoin's down 2.15. Ether is down 4%. 4%. Okay. I did look at a chart at Ether over the weekend, and that was ripe for a breakout or a breakdown, or a breakout, basically, down or up. So let's get into some stocks here. I like the day trade and swing trade here. So Boeing, kind of no surprise here, right? They supply jets. Um, they are up 0.07. Okay, even though they've had a bunch of positive news, the market has not. Like they had positive news and then the market went down. Um, Now obviously we had a nice recovery on Friday. And just to recap that real quick, if you watch my channel, I spoke about it. I said if this news, which was bearish news, and we can't go lower, it's going to be bullish, right? And that's what happened. And then the shorts got their faces ripped off. Okay, but now we got war, so here we are. All right, so every kind of thing is down. Okay, so I'm just gonna go with some laggards here. Now Tesla slumped in China EV sales in September. Okay, so that's taking a hit there. Okay, um, we have Meta got a price target lowered to 372. Netflix got a price target cut to 390. Okay, so a couple cuts coming, right? Tesla also got a price cut. Now we got coins down. Now go to the one percenters, right? It's like Amazon's down a percent, Snow's down 1.22, Tesla's down 1.5, Coin down 1.67, Roblox down 1.7, Nvidia's down 1.8, Baba is down 2.22. Okay. All right, let's move on. Top sector stocks. Okay. No surprise here. Chevron and Exxon up 2.63 and 2.55%. Disney's got an investor, Treon. Okay. They just bought a ton of stake in Disney. They think it's undervalued. They're looking to have board seats, so that's pushing up Disney's price. All right. We got the ARM IPO is getting a bunch of initiated coverage, all positive. So that's ticker ARM. That's a chip designer. That's also going on. Okay, now let's look at the laggards here in the top sector stocks: Qualcomm, Goldman Sachs, Salesforce, and Morgan Stanley. Those are all the laggards. Okay, let's go to sectors. Now, energy, obviously up 2.76%. Okay, now laggard, we got technology, discretionary, that's Tesla, Amazon, Home Depot. Financials, already talked about Morgan Stanley, Goldman Sachs, weakness, right? And semis is the weakest sector. Semiconductors. Okay. So that kind of wraps up that. Okay. Now, as far as the economic news calendar, we can go to that. Now, today we have a bunch of Fed speak starting at 9. Fed Logan, Fed Barr, Fed Jefferson. Tomorrow, more Fed speak: Fed Bostic, Fed Waller, Fed Kashkari, and Fed Daly. Okay. On Wednesday, we have Fed Bowman, and then we have PP. It's kind of interesting. PPI comes out before CPI. So on Wednesday, it looks like PPI comes out, and Fed Waller, speech, Fed Bostic, FOMC minutes. Thursday, we got CPI. Thursday's CPI and initial jobless claims filed by Fed Bostic. Okay. Friday, Fed Harker speech, Michigan consumer sentiment. Let's see if today if there's anything not really have to watch out for. Not really. Okay. A couple earnings this week. Got PepsiCo, United Healthcare. Those are a couple of earnings that are coming out this week. Because earnings season is about to start again. It seems like it just finished. So that's what's going on in that front. Let's look at here some things I was looking at. We talk about the war. That's the ARM. It says top Wall Street brokerages rate ARM stock as a buy. That's what I was talking about. Okay. That's really it. I talked about Tesla's poor volume sales in China. Talked about Disney. All right. That's pretty much the news. Obviously, the war, right? So that's pretty much that. I mean, today my daughter's off, so I don't have to leave so quickly. I might expound on what I saw over the weekend. All right, I know the war happened and the market wasn't open, so I only could look at what I could look at what the market was doing, right? Um, so we're probably going to get into that today. All right, so let's look at. We can go right into daily charts, okay? Just give me a sec while I pull that up. All right, that's weird. Okay. Boom, boom, boom. All right. All right. Let's look at those daily charts together. And I'm going to go on what I wrote this weekend. Okay. Let me just get that. I'm going to pull that up. All right. All right. Let's talk about it. All right. I'm actually going to expand this out. Okay. So here's the SPY. Okay. Now the SPY, okay, broke a downtrend. Okay. We closed inside last week. So this is what we did last week right here is the high and low. This is previous week. So we closed inside the previous week, right? Okay. So we still have the gap right here above us. Okay. You're going to see a stark contrast in the Qs in the SPY. So this is not out of the woods yet. You basically got rid of 1, 2, 3, 4 candles, right? That's pretty good. The shorts from these candles all got smoked, right? But structural wise, it's still not like out of the woods. Okay, SPY is not out of the woods. All right, we're still below these month's lows. Okay, so structure wise, it's not out of the woods. This, all these lows could not break that 200-day moving average. So 200-day moving average was supportive. Okay, right there. And we basically couldn't go lower. Every day we tried. And then the bearish news happened. We brought it down right here to these lows, and then it just got ripped, right? All those shorts became liquidity for people to go long, and they had to cover their positions. Okay, where are we at now? 427. So 427 is about right here. It's almost at the midpoint of Friday's session. So we're back here. Okay, it's almost at the top of this candle. Very interesting what's going to happen today with the banks close. It's going to be probably I don't know what kind of market it's going to be when it opens. I really don't. But that's what I was looking at. I said SPY still needs some work to do. Okay, we're still under the 20 simple moving average, the 100-day moving average, the 50-day moving average. Now they're all declining except the 100-day moving average. You got a declining 50, a declining 20. Okay, we did break the 90-day daily. Okay, that's just more of a momentum moving average. Okay, so that's what I see right now in the SPY. Okay, remember, still work to do. Still got this gap. Now, if we look at some levels here, there's that gap. Well below it. Well below that gap. Okay, well below that gap. Still couldn't break the 431 here. Okay, you break this 431, 432, you then are going to make these shorts cover. So that didn't happen yet. Okay, that didn't happen. All right, so we can move over to the Qs. Let's do that. Okay, so let's look at the Qs together. So this is what we did last week right here. There's last week's highs and lows. Okay, we broke and closed above the previous week's highs. Okay, what else did we do? We filled the gap. So there was the gap, and we filled it. Okay, so see the difference between the Qs and the SPY, right? Because the Qs are really just tech. They don't have anything else weighing it down. Okay, so now where did it go, right? Let's look at this again on this map. It hit the 100-day moving average and the 20 simple day moving average. Okay, also what did it, it filled the gap. So basically it kind of rested right above the prior week's highs. So it's pretty bullish, and you're within the previous months. Okay, so this is not, look at these lows here. I mentioned 355 as a level. We never closed really below 355. Maybe you want to call this day. No, this didn't close. It closed up here. We never closed below 355. We never had a day where we closed below it, except maybe this day for a little bit below it, right? And then look at this. This is the difference in the Qs. Look at all these candles. It took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 candles were taken out by one candle. You can call that like a seller shut off. It just basically shut the sellers off. Filled the gap. Okay. So that's the big difference in the Qs. All right. Now it also closed at the 10-week EMA. Remember, that's something where you really can see a change in staying power of going higher. Closed at the 10-week EMA. Okay. What else did I put here? Yes. Now the one thing I want to show you guys is it closed. Now it closed at the Q's most traded price of the year. Okay, so if I bring you real quickly to this map, and show you this right here is the most traded price of this year in the Qs, 364. Okay, the reason why I'm showing you this is in, like, now you have kind of poor structure here immediately, right? But this could cause, obviously you could keep going, right? But now you're kind of in this web of 100-day moving average, 20 to 50, and the most traded price of the year, right? So you could possibly get chop here. We could possibly chop around here. Maybe hit the 250 moving average, pull back, go above it, pull back, because the most trades have transacted here. Usually you get chop. Okay, you made a nice move, but now I'm not saying, now again, this is probabilities. We could just rip through all this stuff. You have to look at, that's the structure that I try to lean on. Okay, so that is that. All right, and go back to this other chart. All right, so like I said, I have a little more time today. All right, so that's kind of the Qs. Where's the Qs at now? 362.30. So we're at the upper third of the session. We're at the upper third of that session, okay? So we're holding basically these highs right here, or the previous week's highs. We're right there. Okay, but look at these moving. I just see, we could move up and then kind of rest a little bit, right? It could be choppy. All right, it's not as clear. All right. Now, as far as the Dow, all right, let's look at the Dow real quick. I'll just have the time, okay? So the Dow, see this support level if you look to the left? That's a key swing low over here. We kind of hit that, couldn't go any lower. Okay, that's what's going on in the Dow. Okay, it's weak, but it has nice buy in excess at a key support level. could see a snap to 337. So 337 is the most traded price of this year. Okay, and we're still under the 200-day moving average. It's a lot weaker. Okay, it's a lot weaker. And of course, the IWM. Okay, also it's the weakest. Okay, but look at this support level to the left. Right? If you look to the left, this is major support. Support, 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 support. Huge support. Can this be the snapback for the Russell? Okay, it's been hit hard, but it's really at a monster support level. Okay, that's a pretty big support level. So it hit key support of 169. All right, bunch of people probably took profits. It is at the VPOC of the year, so let's just quickly show you that. So here's the most traded price of the year, right? 172, 173. It's right here. Closed right at it. So again, most traded price of the year usually is a magnet. Usually you stall here a little bit. Usually, okay? But if this takes this out and you start creating a base around above it, well, you can possibly move up, right? You're definitely going to move up to 179 and then possibly take a little rest here at the 200-day moving average with this large node here at 185. This has been beaten down a lot. You can see this key support like I just showed you, right? Well, it tagged it, and now, can it break up and hold? It needs to form some structure here above this level, and then you would defend this support, okay? And it can move up. Take out these sellers here and move up. Okay, so, and it's still below the previous month. So if we go here, this is a monthly. I'm sorry, that's a weekly. Let's look at the monthlies. This is why I said this is monster support level. See this? These are monthly candles, and we just hit here. Okay, you need to start working yourself back. That's 3 months of selling. Pretty oversold, but you have to see it prove itself to you. Okay. All right. That wraps up the sectors. Okay. Not sectors. The index. Let's go back to this chart. All right. Now the TNX, I'm not even sure if that reports to. Yeah, it still does. Okay. Let's go to that triple headed. All right. So look at that. These yields spiked on Friday on that bearish news, and then boom, came right back down. But we're still high, holding last month's highs. Okay. Now fear's back in this market. All right. Let's look at the VIX. The VIX is at 19. Remember, a 16 VIX means a 1% expected move on a daily. So we have volatility. It's back. All right. VIX is below last month's highs. All right. So, but still strong, still fear. Okay. This is a month out of fear. That dollar. Let's check that out. Now the dollar took a little breather, went up to 107, and right now we're at 106, about 106.50. Okay. If we break this 105.88, it should take us down to 104. If we break and hold, it should take us down here. But we have to see what the dollar's going to do. All right. All right. Let's get into the market profile. Now, this market, without the banks, okay, this market is really just doing nothing for many, many hours. Okay, so we're going to see that in the charts, in the market profile. All right, we're going to see that. All right. It's almost like you got a big mama candle here and a little baby, right? So let's look at this profile together, okay? And see what we can derive from this structure. Okay, so this is the ES, right? Now you see all these lows, right? Most trader price of the week, 42.65. Market opened here, pushed down, and then boom, single prints. Remember, emotional buying. Single prints, emotional buying. Then you had these highs that were going to get taken out, right? And then you went single prints, and then we kept pushing up. We started like doing this. Boop, boop, went all the way up to this supply zone. Okay? Now, the midpoint of this move, 50% Fibonacci, is 43.05. There's the midpoint. Okay, that's the line of defense usually when you make a big move like that. Okay, now look what this market did. We opened here with a gap down. Okay, because we closed up here. All right, but we're inside the session of Friday because it's so big. All right, we are almost 100% net short because the long activity is that, the short activity is here, but price is here. Okay, so that doesn't give us any edge. Okay, look at the profile over the overnight. It's very balanced. It's right in the middle of the session. So that's equal buyers and sellers, right? The buyers had some luck. The sellers had some luck. They exchanged hands, and they're right at the most fairest price of the overnight, which is about 43.11. So right now it's equal footing, and you're right around the midpoint of Friday. That is not edge at all. Okay? That's pointing towards we could just do this today. Okay? So, I missed this. Let's look at that profile. Okay, so now this profile looking pretty balanced, right? It's got more of a bell curve to it. We finally made excess here at the top. Okay, now what the market's job to do is the most traded price of the week. Okay, the market needs to start establishing value up here. You need to move this up here to really start balancing, building value so it could push higher. Okay, that's how it works. You want price to follow value. Or sorry, value to follow price. Okay, if price is holding out here, value will follow it. And then usually it goes higher. Okay, because if value does not follow price, and let's say we can't build this out, guess what happens? Price returns back to value. It's like a boomerang. Okay, it's like a slingshot. If you can't establish new value, you're going to return to value. Okay, that's how that works. Now we broke out of this key level here. Now the midpoint of this move is pretty much the key resistance level that got broken. So if we start to dip back into this range, okay, you have single prints here. That's weak structure. And those longs will then have to cover. And then we will go back to the bottom of this range. That's how that works. All right? If you have all buyers, okay, now this is called balance rules. So this is the balance low. This was the balance high. Okay? Whenever you break out of balance, the first thing is called a test. You're testing the breakout. It's not confirmed yet until we get continuation. Okay? That's the test. Now, if we do this and do this, well, then that's the move. You had the test, and that's the breakout. Okay? However, if this is called a look above and fail, if you look above and fail, you're going to go back to the other end of balance. Okay? And if you break lower and hold, and that's a test and a move, generally, rule of thumb is you will go the size of the balance area. You will take this size and basically will make equal size down move. Okay. Now I'm a little more lengthy today in explanations because I have the time. Okay, so that's balance rules. So if you see us, this was just a test and it's a look above and fail, we're going to go to the other end of balance. Okay, that is 42.40. That's where we're going to go. And then it's again a test. Is we going to test and move down, or are we going to also test, look below and fail, and we'll go back? So this is all things that I don't know will happen, but I'm telling you what will happen if you do that. Okay, a lot of poor structure below, but the market is holding the 50%. So right now, this is still in a bullish structure until otherwise. Okay, you do have a demand zone that's been formed here. Okay, so today, like I said, the banks are closed. I really have to see. There's, like I said, the war is going to push some volatility in, and we really have to see. Right, this range is only 23 points in the futures. That's not a huge range. I mean, look at some of these other ranges, right? So, but the volume is there because of the war, right? So let's just get into some scenarios here. Like I said, no edge here. 43.05 is a very key level. That's the top of the balance area. That needs to be defended. And you also have a nice demand zone here. Okay, so what you want to see is somehow the market move into this demand, see if it can hold it. If it can hold it, okay, possibly can start making that move. Take these single prints out and start moving higher. See if we can test Friday's highs. Okay, that's really what I'm going to look for. It needs to hold the balance highs, 43.05. If it doesn't, well, guess what's happening? You got to look at the bearish side. Okay, bearish side would be, okay, could move up, and then if it takes out this demand and we hold here, this is going to be quick. There's single prints below. That's poor foundation. Okay, there's not going to be much support here. Now, if there's volume and if there's people wanting to take profits, right, you are going to rip through these single prints. Now, you do have monthly VWAP here at 42.90, but you could just do this, zoop, right back. Now, now these are bearish scenarios. I'm just got to say this though. If we do break this demand and we do not clean all the single prints and we start working our way up, that's bullish. Okay, but this would be the look above and fail. Come out, take this demand out, boom. Really weak, you're going to have people get nervous and cover and liquidate their longs. But I don't know. Okay, that's it. 43.05 is the line in the sand today. 43.05, previous balance high. You have a demand zone pretty much overnight, and below, single prints, weak foundation. Okay, but if it proves to hold, that is a sign of strength for the buyers. Okay, all right, that is the ES. Okay, let's go over to the Nasdaq. Nasdaq, member, I said had strength. Remember, I said it had strength compared to the ES. Remember, it doesn't have some of these sectors weighing it down. Okay, so let's get into it. Now, this looks more of like a balanced profile, right? Got some excess here, got a little low volume, got a value, another distribution here, but then you have excess. Okay. The lows aren't as beautiful as the SPY's lows. Okay. And it just took out so many shorts. So many, like I showed you in the Qs. Okay. Now, huge level. Okay. What is that? 14870. And the Nasdaq right here, it's the most traded price of the month and the week. We are above that. Price is here. Price is there. Okay, 149.77. That I talked about that on Friday. I said big, huge moves come from when the most traded price of the month and the most traded price of the week line up. Huge moves happen. Okay, that happened to be the Qs. All right, that wasn't the SPY. It was the Qs that had that setup, and then it just exploded. I mean, I got long on the Qs on Friday. I had a pretty decent trade. Wish I would have held longer, which every trader probably wishes they would have held longer, right? But pretty decent trade. Okay. Now, all right, so we're above that. Let's look at the structure together. Price is there. We're above this level. Bull. That's got to be bullish. That's the level you have to defend today. You have to defend that level. Okay, look, we're pushing up now. We were just here at the lows. Okay, there's not a lot of edge in this. Let's look at this. Here's Friday's highs, Friday's lows. Here's the Fibonacci, the 50% right there. We're holding above it. We didn't even touch it yet. Remember, in the SPY, we pierced that. We pierced that. Okay. Now, let's look at our overnight high, overnight low. Okay. You're 100% net short in the Qs. We opened here. All the price has been short. You're at the lower portion of the range. Okay. Now, one thing in market profile, fine profile, you see this 45-degree angle in this profile? 45-degree in the market profile. That usually is shorts getting poorer and poorer location. It rings more true for the RTH session, but the 45-degree line is just shorts they're getting poorer and poorer location. Okay, so what I'm seeing right now in the Nasdaq is it's kind of queuing up for a nice little move to the upside. Okay, why? 100% net short. So everybody is short from the overnight. Now those are weak hands. Overnight hands are weak, meaning they're not the big players. All right, so you're at the lower portion of the range. So you have liquidity here above us that is short, right? So if we start to move up, of course, above this most traded price of the overnight, you're going to get a nice pop. See if you can test the highs. All right, because look at the Qs. 50% Fibonacci hasn't gone by it, right? Breakout point was really much where the 90 MA daily is right now, holding above it. Okay, so you're not in the middle of the range. You're kind of to the top third of the range. So it's interesting, right? I like more of the bullish play here in the Qs. Okay, and it's very simple. This is really simple. Okay, so let's just get into that. Pretty simple here. Okay, you want to defend right here, 90 MA daily, 149.58 around right here. 149.31 is the midpoint, is the 50%. So this area you wanted to defend. So in a beautiful scenario, I would want to see the market push down into the 50%, into the top of the resistance area. Okay, and if it holds, does a couple lower highs, you're probably going to get a nice push up. Take out this overnight high, maybe go towards the highs of Friday. Now, the highs of Friday, stopped right at single prints from the past, which was emotional selling. So there's weak structure above us that you could rip through them. Okay? Now, like I said, I don't know if that happens today. All right? I don't know if there's enough liquidity up here to really just shove that up, but the single prints help. Okay? So that's what I see. Okay, now, the Qs is a little different. This is that monster level. So this is really the line in the sand to flip to a bearish stance in the Qs. Because you could see even this, take out some single prints, come back in, and you could defend this level that also can push us higher. Okay, so you not only have this level here to defend. If that doesn't get defended, you still stay bullish because we're above this level. If that gets defended, then you got even more liquidity short from here, and then you can put some pain into those shorts, make them cover. Okay, of course, we can go to the bearish case. Okay, now, like I said, here's the 50% line. Everybody's long in stocks from here, right there. Okay, so, and you got single prints, so you moved up here. So if you start pushing down, right, taking some of these single prints out, you might get some longs liquidate their positions, take some profits, right? But this is the real key. You need to break and hold under this level, hold under it to really go back to Friday's lows. Could it happen? Yes, could happen. You just have to see if it happens. And you have to find acceptance under this level. Acceptance just means you start to balance under this level. Right? If you do a quick boop, that's not acceptance. All right? So that's what I see. Hoping somebody's there with me here. Now, if anybody's there, maybe Rosita probably might not even be listening anymore. But subscribe if you set an alert, and set an alert if you can. Give me a thumbs up. Be much appreciated. You could always follow me on X at Gonzo719. Okay. Now the one thing, all right, that I can state really quickly, I'm just going to go back because I think there's some important things here to talk about. Now that I have the time, I have about a good 7 minutes that I could go over here. Okay. Now, I want to show you guys something here. Really quickly. Okay. Let's get rid of this. Colby, if you're still with me, I'm going to show you something right here, buddy. Okay? I want to make sure everybody understands this. Okay? S&P. All right? S&P 500. It's made up of many sectors, okay? But there's only 4 that really move the market. All right? I've talked about this before. Okay, what do we have? We have technology, XLK. It's 27.5% of the S&P 500. That's the weight of XLK. Who's in XLK? Apple, Microsoft, Nvidia. Okay, that's XLK. All right, it's 27% of the market. That's the weight, right? Second is healthcare at 13.4%. United Healthcare, Merck, Pfizer, Johnson & Johnson. Okay, so that's 27%, right? And 13%. That's 40% of the market. Right there is 40% of the market. So wouldn't you think you'd have to pay attention to that for SPY, right? Financials is 12.8%. Okay, that's your JP Morgans, Berkshire Hathaway, Goldman Sachs, Morgan Stanley, Bank of America, Wells Fargo, Citibank, right? That's 12.8. So what did I just say? 40? So now we're talking 52% of the market in three sectors. Let's go to the fourth, consumer discretionary. That's 10.7. So what are we at now? 60% of the market. Consumer discretionary. Who was that? Amazon, Tesla, Home Depot. So these top sectors, you really have to pay attention to what they're doing. Okay? That is the top four big boys. I just said it's 60% plus of the S&P 500. So you have to see what these are doing. These sectors are going to tell you how SPY is doing, how the the S&P 500 is doing. 60% of the market is in these four sectors. Okay? Then yeah, you have communications. Okay? 8.9. Then you have industrials 8.3. Staples 6.6. You notice how they're getting smaller. Energy 4.7. Utilities 2.6. Materials 2.4. Real estate is 2.4. Real estate does not move the market. The sector does not move the market. Okay? It could do whatever it wants. It's probably not even going to show up in the market. Okay? So these bottoms, like Staples, energy, utilities, materials, real estate, they don't move the market. Okay? They could be super red and the market could be ripping. Okay? So, just that I showed you that. This is why I pay attention to the top four. This little chart here shows you every day when the market opens, I see what these sectors do from the open, not from yesterday's close, from the open. So I'm seeing the strength off the open, right? This has just happened what it looked like on Friday. Look, Staples was down 0.1. But look at these monsters, 2.6%. Technology moves the market, right? That's basically the Nasdaq, okay? So, now I'm not saying communications isn't important because you got your Google, okay? You got your Meta, you got your Netflix. So that's important, but not as much as these, okay? So now that I stated that, we're going to get right into sectors, okay? We can get right into it, and I can just show you what I'm talking about. Okay, let's look at XLK. XLK is going to mimic the Qs, the same analysis. Okay, it actually filled the gap previous week, but look. I'm gonna get over here. Okay, this is technology. This is 27% of the market. Pretty strong, right? That's why the Nasdaq is strong. Okay, so same as the Qs. Now, here's the difference of why the S&P is not as strong. Okay, let's go to the second weight, healthcare. Look at healthcare. Does that look strong? Remember, it's like almost 14% of our market. Look at this. Boo. But it came to a key level. Okay? Came to a key level. Hit key support of 127. I believe it could be bottoming and head towards 133. Okay? So that's one thing. That look what healthcare did on Friday. Bottomed out here, and it could be a bottoming of healthcare. Okay, now why is that important? Next year, recession might be on the map, and guess what? Healthcare is recession proof. Healthcare is recession proof. So this could be the turning point in this. Okay, I believe to the end of this year, large cap tech is going to be the leader still until next year because sector rotation is real. Okay, so that's healthcare, right? Look at that move. It went down to a key support. Okay, now who's the next weight? Financials. That is not strong either. But look at this trend. Hit the trend, hit the trend, hit the trend again. Could this be the next upswing in financials? I don't know, but it's weak. So this is the weakness. I just showed you strength in the XLK, weakness in the healthcare, weakness in the financials. Right? This is the reason why SPY is not as strong. Okay? Now, discretionary. Discretionary is setting up. Okay? I think this is the make or break. You got this is Amazon and Tesla. Now, I really like this discretionary. I'm gonna wrap it up probably here. I'm gonna set it was now. I'm gonna show you a bunch of stuff. Okay, a bunch of stuff, and we're gonna get into it. Okay, look at the support at 156. Okay, you got the 200 moving average down. Okay, it's setting up for a breakout. Okay, this is really, really important. You have a downtrend here. It needs to break it, right? You have a gap above us. Okay, but I want to show you a couple things. All right, let's get into it because this will be the last thing. All right, this is really important though because I want to show you all the tools I'm using to see what I'm seeing. Okay, now let's look at this. Okay, I'm going to show you a couple things here. Okay, this is why I like it. Now, if I think we're going to rally into the end of the year, this is very, very important. So this is discretionary on a weekly. It hit the 200-day weekly, 200 weekly average. See this double bottom here on the weeklies? Double bottom at that 156 level. Okay. And the monthlies are showing that too, but the month's not over yet. So that's that, right? So this is right here. Okay. Buy in excess, buy in excess. Okay. Now, also, it has this weak structure below it. It's held it. That's bullish. Okay. It has low volume here, nodes. It's holding it, right? Structure wise, that would be bullish. Okay. Now, you know how I talk about whenever the most traded price of the month and the most traded price of the week line up, a breakout, a huge breakout happens. Well, this is Tesla. This is Tesla. This is consumer discretionary. This is a weak most traded price. This is a weak most traded price. Most traded price of the month is 160. Okay. This is queuing up for a huge move. Huge move. You have 2 weeks in a row, and 160 has been the most shares traded. Okay. This is where, if you break up here and hold 163, you have the gap above, and you can start getting a big move. Now that's the number 4 sector in the market. If financials are catching a bottom, and if healthcare is catching a bottom, this could propel the market higher. Okay. Now it could also break lower, but we just kind of gotten hammered, right? We really going to go lower? We can. I'm not saying that's not possible, but I'm looking more to the upside. So this is everything I'm looking at for discretionary. Now you can look at an Amazon or a Tesla chart, or you can just play discretionary, the sector, right? So I just think that's very, very important. To recap, XLK super strong, 26-27% of the market. Healthcare just hit a bottom and could be on its way back up. Financials also hit a key support, and now you have discretionary that's been holding, and it's ready to break out. All right. So hopefully, maybe that sheds some light. All right, really quickly. If you look at I'll just show you really quickly. XLC Communications has been very strong. Okay, it was the weakest sector last year. It's really showing strength. It could break out to the top. Okay. Okay. Also, XLI has been beaten down. Look at that, right there to the most traded price. Okay. XLP's been broken down. That's staples. Look at that. Okay. Now, where I'm getting at now, okay, is you have weak healthcare, weak staples, okay, industrials, okay, utilities. It's gotten hammered. This is setting up for a rotation, okay. I'm not predicting anything, but if we do go into a recession next year, these staples, utilities, healthcare, the industrials that have been beaten down are going to be the hot stock next year if we go into a recession. And the technology will take it down, will go down, and these sectors will move up. So I'm going to leave you with that. All right. Hopefully that made sense to everybody. Hopefully that helped you. I know that's how I look at the market. You want to see each piece, each component of it, and go, oh, okay. You just don't bet on the SPY if all sectors that move the market are not strong. So, that's about it. All right, everybody have a good day. I don't know what we could expect from today. Could be low volume, all right, or not much movement, but I don't know, you know. So, Colby, I'm glad you enjoyed it. Um, and I'll see you guys tomorrow. All right, good luck today. You got the plans.